Welcome to the deep dive. This is where we take information you're maybe grappling with, could be articles, videos, you name it, and really boil it down to the key stuff.
Yep, helping you get informed quickly, efficiently, without drowning in data.
Exactly. So if you're keen to learn, like hearing different angles and enjoy those aha moments, you're in the right place.
Today, we're digging into a YouTube video transcript. It's from the Stock Market Education by Mukul Agrawal channel.
That's the one, titled Bitcoin Trading on Delta Exchange India, Crypto Trading for Beginners. And our mission basically is to understand this specific Bitcoin trading strategy he lays out, plus the platform, the tools he suggests.
And he makes a pretty bold claim, doesn't he? About potentially catching, 2,500 points in Bitcoin daily.
Yeah, 2,500 points. Sounds huge. So let's unpack how he thinks that might even be possible.
Okay, so the video kicks off by talking about some common headaches for traders, especially in the stock market. He calls it the trader's dilemma.
Right, like just picking which stock to trade when the market opens. So many choices.
Yeah, that paralysis.
Yeah.
And then you finally pick one, jump in, and nothing. The stock just sits there. Super frustrating.
Happens all the time. And he also mentions option buyers getting hit by theta decay. Maybe just quickly, what is theta decay for anyone listening?
Sure. So options contracts have a time limit and expiry date. As that date gets closer, the time value part of the options price just melts away. That's theta decay. So even if the stock moves your way, if it takes too long, theta can still eat up your potential profit. It's a real challenge for buyers.
Got it. Okay. He does also plug a masterclass he's running starting April 10th about finding momentum stocks, booming sectors. It gives a phone number too.
Right, but the main thrust quickly shifts to comparing stocks versus crypto.
Yeah, and this is where he really starts pushing crypto trading. Calls it a gold mine, especially for momentum traders.
The argument is basically that crypto offers these big, fast moves pretty often. Huge potential swings, huge potential profits, according to the video.
And he lists some specific advantages, right? Like, number one, you don't have that whole which stock do I pick problem every morning.
Exactly. And number two, he claims momentum is just there in crypto. Like pretty much every day you can find something moving.
Which sounds appealing, I guess.
And another big one, it's open 24/7. Unlike the stock market, he mentions the Indian market hours, 5:15 a.m. to 3:30 p.m. IST.
Right. So if you have a regular job or business, you can actually trade crypto whenever you're free.
Yeah, you can trade in the evening, overnight. He even paints this picture of waking up and finding Bitcoin has jumped, say, 3,000 points while you slept.
And those points he's talking about, that's basically the dollar price movement of Bitcoin, right?
Yeah.
So 2,500 points means a $2,500 move in the price of one Bitcoin.
Correct. That seems to be the context here.
Okay, so to actually trade this, the video focuses on one platform, Delta Exchange.
And a key feature they highlight is leverage. High leverage, up to 200x apparently.
200 times.
Right.
Wow. Okay, explain that. He gives an example, doesn't he?
Yeah, he says with like 1,000, you could potentially control a trade worth 2 lakh using that 200x leverage.
So a small move generates a much bigger profit or loss.
Exactly. That's the double-edged sword. He shows how a 5% profit on that euro lakh position could net you 10,000 from your initial euro 5,000.
Sounds amazing, right?
It does, but what if it goes down 5%?
Well, that's the risk. High leverage magnifies losses just as much as gains. A small move against you could wipe out your initial capital very, very quickly.
So he does caution against going full 200x then.
Oh, yeah, definitely. He suggests maybe sticking to something more manageable, like 10x or 20x leverage. Still significant, but maybe not quite as terrifying.
Right. So let's look at his more practical example using Bitcoin on Delta. He starts with 10,000 capital.
Yep, 10,000, and he uses 10x leverage. So that gives him a trading fund of 1 lakh.
Okay. And then he shows placing a trade on Delta's platform. How does that work? It's about lots, isn't it?
Yeah, Delta uses a lot system. He explains one lot on their platform is 1,000th of a Bitcoin, 11,000 BTC.
Tiny fraction. Very. So in his demo, he takes a position of 12 lots using 10x leverage. The margin required for that, he shows, is about $100.90 USD.
Which is roughly $1,000 or 85,000 worth of Bitcoin being controlled. Is that right?
Close. The margin is $100.90, but the value of the position would be 12 lots, Bitcoin price 1,000. With 10x leverage, $100.90, margin controls roughly $1,009 worth of Bitcoin, which is around 85,000. Yeah. So 12 lots equals 0.012 Bitcoin.
Okay, 0.012 Bitcoin. Got it. So how does he calculate the profit on that based on his 2,500 point target?
Right. So he takes the target, 2,500 points, which we're assuming is $2,500, and multiplies it by the position size, 0.012 Bitcoin.
So 0.012 times 2,500, that gives 30.
Yep, 30. And since Bitcoin trades in dollars, that's $30 profit potential.
And he converts that $30 back to rupees? Comes out to 2,550 in his example.
Exactly. So the pitch is potentially make 2,550 profit on an 8,500-ish investment or margin used.
It sounds good when laid out like that, but is catching 2,500 points consistently really feasible, especially for a beginner? What about fees, slippage?
That's the million-dollar question, isn't it?
Right.
Transaction fees will definitely take a bite. Slippage, where your trade executes at a slightly worse price than you expected, that can happen, especially in fast markets.
And just the discipline, right? Sticking to the plan.
Absolutely. Consistent profitability in any market, let alone volatile crypto, takes a lot of skill, experience, and really robust risk management. It's rarely as easy as just following a formula.
Speaking of risk management, the video does push Delta's automatic trailing stop-loss feature quite hard.
Yeah, that's presented as a key tool. The idea is you set it up, and if the price moves in your favor, the stop-loss automatically moves up with it, locking in some profit.
But if the price turns against you...
It closes your position automatically, limiting the potential loss.
And he talks about a risk-reward ratio.
He aims for 1.3. So in that 2,550 potential profit example, he mentions the corresponding risk, if the stop-loss gets hit, would be around 850 to 900 year.
Okay, so you're risking one part to potentially make 3 parts.
That's the idea. And he also wisely advises not putting all your trading capital into one trade. Keep some powder dry, basically.
Good advice. Okay, let's get into the actual strategy he calls the rocket strategy. What's the core philosophy?
It boils down to a saying he uses. Trade se paisa nahi, trend se paisa banta hai.
Money isn't made from just trading, it's made from the trend.
Precisely. So it's a trend-following strategy. You get in and you try to ride the wave using that trailing stop-loss.
Trend following, I mean, that's a classic approach. What are the typical upsides and downsides, especially in crypto?
Well, the big upside is if you catch a strong, sustained trend, you can potentially make really significant profits. The system is designed to let winners run.
But the downside?
Whipsaws. When the market is choppy, moving back and forth without a clear direction, trend-following systems can get chopped up lots of small losing trades as you keep getting false signals.
And crypto can definitely be choppy.
Oh, yeah. So identifying a real trend versus just noise is key, and that can be tough.
He does mention one supposed advantage for crypto trend following, though no gap up or gap down risk, like in stocks.
Right, because it trades 247, you don't have those sudden price jumps that can happen when a stock market reopens after being closed overnight or for the weekend. Theoretically, smoother price action.
Makes sense. And he quickly shows setting up the trailing stop on Delta.
Yeah, just a visual walkthrough. Place a market order, then find the trailing option, set your parameters, like how far behind the price you want the stop to follow. He mentions exit P&L and stop P&L, showing your potential exit points.
Okay, so why Delta Exchange specifically? He lists a few reasons. Security is one.
Yeah, he mentions its FIU Registered Financial Intelligence Unit, presented as a sign of legitimacy and security in India.
And obviously, the automatic trailing stop and target orders are a big selling point for his strategy.
Definitely. Plus, he claims fund withdrawals are fast, often within an hour, max 24 hours. And importantly for Indian traders, easy INR deposits and withdrawals.
Right, avoiding crypto to fiat conversion hassles. Okay, let's really break down the strategy steps now. Time frame first. 4-hour chart.
Yes, specifically the 4-hour. He stresses this is for catching trends, not scalping tiny moves.
Makes sense for a trend strategy. Now the buy setup, what's the trigger?
Okay, step 1. You need to see a red candlestick form on the 4-hour chart.
A down candle. Then what?
Step 2. Look for the next candle to be green. But, and this is crucial, the low of that green candle must not go below the low of the previous red candle.
It can touch the low, but not break it.
Exactly. Step 3, the entry. You buy when the price breaks above the high of that initial red candlestick.
Could be the green candle itself that breaks it, or maybe a later one.
Could be either. As soon as that red candle's high is breached, that's the buy signal according to this method.
And the stop loss for that buy.
Goes right below the low of the initial red candle.
Okay. And the target is that 1.3 ratio, managed with the trailing stop.
Correct. He shows charts with arrows pointing to these red candles, then the green candle respecting the low, and the subsequent breakout above the red candle's high.
Clear enough. Now the sell setup, is it just the mirror opposite?
Pretty much. Step 1. Identify a green candlestick on the 4-hour.
An up candle.
Step 2, look for the next candle to be red. The crucial bit here is the high of this red candle must not break above the high of the preceding green candle.
High has to hold.
Right. Step 3, the entry. You sell short when the price breaks below the low of that initial green candlestick.
Stop loss for the sell.
Placed just above the high of the initial green candle.
And again, target 1.3 risk reward, use a trailing stop.
Exactly. Same logic, flip for shorting. He shows examples of this pattern too.
Okay, but patterns fail sometimes. He adds a filter, right? The ADX indicator?
Yes, the average directional index, or ADX.
Yeah.
This is brought in to try and confirm if there's actually a strong trend in place before taking a signal.
How do you set it up according to him?
You add the ADX indicator standard on most platforms, but he specifies changing one setting. The DI length needs to be set to 9.
Okay, DI length 9. Anything else?
Yes, you need to draw a horizontal line on the ADX indicator window at the level 25.
Level 25. And what's the rule?
The rule is simple but strict. Only take a buy or sell signal from the candlestick pattern if the main ADX line is above that 25 level.
So ADX above 25 means the trend is potentially strong enough to trade.
That's the interpretation here. If ADX is below 25, the market is considered too directionless or choppy, so you ignore the candle pattern signal, even if it looks perfect.
Does he show examples where this filter would have helped?
Yeah, he points to instances on the chart where the candle pattern gave a signal, but ADX was below 25. In those cases, the price apparently went the wrong way shortly after. So the ADX filter, he argues, would have kept you out of a losing trade.
But ADX is a lagging indicator, right? It confirms a trend that's already started. Does that cause issues?
It can. Because it's lagging, you might miss the very beginning of a move. And sometimes, by the time ADX crosses 25, the trend might be getting a bit mature. It's a trade-off.
So it's not foolproof, even with the filter?
No, he acknowledges that himself. No strategy is 100%. The ADX is just meant to improve the odds, filter out some of the weaker setups. You still need to consider other things.
Like what? What else might you look at?
Well, basic support and resistance levels are always important. Volume can give clues about the strength of a move. Maybe other indicators for confirmation, depending on your style. ADX alone is rarely enough.
Makes sense. Okay, so after explaining all that, how does the video wrap up?
Pretty standard call to action stuff.
Yeah.
He encourages viewers to rewatch the video, practice the strategy, maybe on paper first, hopefully.
A good idea.
And share their results. He also invites people to follow him on Instagram.
And there's that offer for people who sign up to Delta using his link, right?
Yeah, fill out a Google form, get access to a private Telegram group, maybe some extra learning sessions. And he finishes by reiterating that the 2,500-point target is achievable if you just focus on the trend.
Right. Okay, so let's try and summarize the key bits we've extracted from this deep dive.
All right. The core strategy is trend following on Bitcoin using 4-hour charts.
Entry is based on specific candle patterns. Red then green for buys, holding the low. Green then red for sells, holding the high.
Stop losses are placed at the low high of that initial candle, aiming for a 1.3 risk reward.
Managed with an automatic trailing stop loss, specifically highlighted on the Delta Exchange platform.
And crucially, using the ADX indicator set to DI length 9 as a filter. Only trade if ADX is above 25.
So that's the essence of the approach presented in the video. We've tried to pull out the main ideas and potential insights for you, hopefully saving you some time.
And hopefully this discussion gave you, the listener, a better handle on things like momentum trading, the power and danger of leverage, why risk management is so vital, and how technical indicators like ADX can be used or misused.
Which brings us to a final thought for you to chew on. The video puts a lot of emphasis on following the trend and uses this specific ADX filter. But given how wild and, frankly, unpredictable crypto markets can be, what other factors, maybe beyond just this technical setup, do you think a trader really needs to master or at least consider very carefully to have a shot at long-term sustainable success in crypto? Something to think about.
Definitely food for thought. Well, thanks for joining us in this deep dive. If you've got a source you want us to tackle next time, do send it over.
Yeah, we'd love to see it. Thanks for listening to the deep dive, and we'll catch you on the next one.